as my screen says there, hopefully you can all see it. Wellington values have been gently rising recently, but I do stress that word gently. It is super gentle that if you were looking at it from a distance or you forgot your specs, you could be forgiven for not noticing it rising at all. But it has definitely, in the last 3 or 4 months, the values have stopped dropping. They had been dropping until then, throughout most of 2024, until about August. That value fall has been arrested, ever so slight increases. So for sellers, the good news is, prices are not going down, maybe going up a little bit. The most positive news really for sellers is that the number of sales has really recovered quite good strength in the volume of sales in November compared to recent months. In fact, it's about the most sales that we've seen since the previous peak of the market about 3 years ago. So that's certainly encouraging for sellers. Sort of shows that there is good underlying demand still there. Perhaps there's some more demand coming through as a result of interest rates dropping. We are still seeing reasonably strong levels of listings, more listings than last November, more listings than November 2022. But the degree to which that is increasing from previous years or previous Novembers is not as great as the growth we've seen in sales volume. So that's good, because it has been the other way around. We have seen listing volumes increasing faster than sales volumes. Anyway, those of you who are sellers, or message for sellers is there's still a lot of choice out there. So, make the most of these conditions while they last. It's good buying opportunities still. So let's look at the detail. Median sale price 773 versus 787 a year ago. So down 2%, up 1%, down 2%, up 2%, down 1%. You can see the red line there. It has been roughly stable for well over 2 years now. So it really fell precipitously from October 2021 through to middle of the year 2022. And then since then, which is around about here, I believe, yes, then it's been broadly level since then, down a bit, up a bit, and so on. I don't pay too much attention to median sale price because it doesn't just reflect underlying value, it also reflects the mix of properties being sold. So Real Estate Institute House Price Index is the best measure for that, I believe. And so let's look at that. There's the league tables, and unfortunately Wellington still does occupy the bottom of the table, if you like, having fallen furthest since the peak than anywhere else. We did reach a trough of an absolute bottom of about minus 26%, not quite. So we're sort of 1.5% off that. We recovered a bit, and then we dropped a bit again. But at negative 24%, as you can see there, our nearest contender is Auckland at 20%. So we are definitely the underperformer in the team there. And interesting, look at that, Southland compared to the peak is actually at a new high in November. So there's been no falling of values down there. So yeah, Wellington still leads the league tables for all the wrong reasons. Over the last year, again, nowhere has fallen further than Wellington, unfortunately. Again, Auckland is not far behind, 3.9% versus 3%. And so it really is the main cities that seem to be suffering most. Wellington, perhaps particularly over the last year, because of the softness in the labour market arising from the the cuts in the government jobs. Over the last 3 months, again, you can see a little bit of a recovery there for Wellington. Everywhere else around the country has recovered more, except Otago, only in the last 3 months or so. But yeah, again, Wellington is pretty much dragging the chain, certainly. So Wellington has been the outstanding performer in this table for all the wrong reasons, unfortunately. Looking at the Wellington in particular, there's the shape of the graph. You can see there throughout 2023, we were showing good recovery until the election, and then it started tailing off again. Throughout the most of 2024, values were falling away, And then in the recent months, we've seen some recovery there. But as you can see there from the 3-month result there, it's 0.9% in 3 months. So this is hardly stellar growth. But it is growth. It is positive, not negative. And so, we'll take that. Over the last year, you can see Upper Hutt's had a good performance. 6%. Everywhere else is down by varying degrees. And as you can see quite clearly there, Wellington City softened more than anywhere else at 7% down over the last 12 months. And over the last 3 months, varying degrees of recovery at the various territorial authorities. The shorter the time period, of course, the fewer the number of sales can be counted, and so the more variability gets introduced into the data. Overall, a gentle recovery there over the last few months. Porirua down 1%. It's hard to know whether it's statistically significant at that level or not. But anyway, there's the trend. So varying degrees of recovery in the last 3 months or so. Wellington City in particular, there's the graph there. You can see it's more sawtooth, more peaks, more troughs. The peaks are a bit higher typically. The troughs are a bit deeper typically. So you can see there in 2022, as we came off the peak into winter 2022, we were down 12% in 3 months, recovered quite quickly, and then we were bouncing around zero or little negative numbers, as the blue line there indicates. 2023 we saw recovery, and 2024 a softening of values again, and in recent months a recovery. So similar trend overall to Wellington region, but just with some more extreme higher highs, lower lows, and more variability in between. So number of new listings. So you can see there for a good period of time since the election, we saw an absolute ocean of new stock coming to the market. That was vendors who'd been holding back. Then they saw good results coming through in 2023 as the market strengthened, but they held back till after the election. Then everyone decided to do the same thing and put their property on the market. We literally doubled in Wellington City between about 460 listings and 920 listings on Trade Me between October 2023 and June 2024, or May 2024. And so, yeah, huge increase in supply. As we head into winter, then that, of course, started tailing off again. As we come out of winter, you can see the blue bar chart there, numbers increasing. So 866 in November versus 783 a year ago. That's growth of 11% compared to a year ago. And 828, that's growth of 5% compared to 2 years ago. So more listings than we saw in the last 2 Novembers. But still not up to what is the long-term norm for the month of November, being almost 900 there. So more than the last couple of Novembers, but still not up to long-term norms for the month of November. Of course, November is typically a big listing month. And there it is, you can see compared to 12 months ago. So yes, we are slightly ahead of 12 months ago, 11% more than 12 months ago. And for most of the rest of 2024, until now, we've seen increases relative to 12 months prior of significantly more than 11%. What about number of sales? And this is really an interesting result for this 1 month in particular. And as you can see there, 852 sales compared to 644 a year ago and 562 2 years ago. So a third more sales than a year ago and half as many more sales again compared to 2 years ago. Now, of course, 2 years ago, November, that was the first month after the technical peak in prices. That was exactly when buyers were pulling way back and sellers were stepping way forward or starting to. And so the market really just hit the brakes then. And so November, number of sales in November was a low, certainly a low base 2 years ago. So 852 compared to that was a big increase. And for the first time in ages, we've seen volume of sales for the month above average for the month. So at 852, we're definitely a healthy margin above the November average of 789. So that's really encouraging for those of you who are selling or looking to potentially sell, or those of you thinking, I want some support for the market. This certainly shows that, yes, there is demand out there for property. There are buyers who are wanting to transact. And so, yeah, for the first time in ages, we've seen above average number of sales for the month. And if you look back, The last time we got more than 800 sales in the month was right at the end of 2021. So, that's 3 years ago. It's been a long time since we've had this many sales. So that's definitely a positive sign of health in the market, maybe starting to return. And there it is again in a different format. So compared to 12 months ago. So yeah, significantly more than 12 months ago. Not too dissimilar to many months we've seen this year. Not quite as extreme as the increase in volume in listings typically coming to the market. But nonetheless, yeah, there have been more sales taking place. But this November result in particular is encouraging. How long does it take to sell? So still quite a long time, 42 days. November average is 33 days. But when compared to the last two Novembers, 34 days, so significantly longer than that, and about the same as it was 2 years ago. Remember, 2 years ago, again, the market was just grinding to a halt. And so, to compare it with that and say it's the same as it was 2 years ago, yes, but 2 years ago was slow or just had really just started to slow down. So when we look at that long-term trend, you can see there it's been taking longer to sell typically as we go through 2024. That's consistent with my reporting that 2024 has generally been a tough market until the last few months. And so at 42 days, still above average, but it's less than what we were seeing, which is the high 40s earlier throughout 2024. So it's an improvement since then for sure. Inventory, how many weeks worth of supply have we got? Let me just let someone in, excuse me. 13 weeks worth of supply, exactly the same as the previous two Novembers. Obviously, in the meantime, there's been a lot of ups and a lot of downs. So let's look at the recent trend. As I've been saying, 2024 has been generally a tough year. That's consistent with the amount of inventory generally increasing, as you can see by that red line there. But the last, this month at 13 weeks is less than we've had since, gosh, when was that? April this year. So throughout the winter, it's been more inventory than this. So the result at 13 weeks is tighter in terms of overall inventory levels than we've seen for about 6 months or so. So again, encouraging news of late. And there's the long-term average, which is 15 weeks. Now, if I asked your average person, are we in a buyer's market or a seller's market? No one would say we're in a seller's market, although this bit of data suggests we are, because we've got less inventory in terms of the week's worth of supply than we typically have, which is 15 weeks. But that's a long-term average. And what's normal over the last 9 years or so is 10 weeks. And so compared to 10, which is normal over the last 9 years, pretty much as long as we can remember, most of us, which feels normal for us, 13 weeks feels like a buyer's market. Number of Trade Me listings. So generally, you can see that red line there. It's been hovering around this level around here, which is higher than that red line has been since way back in 2015. So we have had an abundance of supply. There's been an ocean of supply for buyers. Interesting that buyers who are new to the market, who don't really have any relativity to compare it to, still think that there's not enough to choose from. Well, they got another thing coming. If they think this is undersupplied, then it's gonna one day it will look like absolute oversupply. But I mean, earlier in 2015, 2014, 2013, we had more supply than this. So I'm not suggesting it can't go higher. It absolutely can. But we haven't had these generally speaking, these supply levels since 2015. As is typically the case, as we go from November to December, new listings stop flowing to the market. Things continue to sell, and so the number of listings on the market, just seasonally reduce as we head into winter, and it will stay that way until, I would suggest, mid to late January at the earliest. But 27 or so listings as of a couple of days ago, compared to 31%, 2,069, so that's 31% more now, and 2,470, that's 9% more now compared to 2 years ago. But as I say, you look at the graph there, you can see we've never been at these levels of supply overall in terms of the 6 monthly average for about 9 years or so. And there it is in the other format. So compared to 12 months prior, so we have seen consistently sort of 30 or 40% more supply compared to 12 months prior for the last 6 months or so. That trend is heading back towards parity, but only very slowly. So, folks, in summary, we have got values which have improved, but only ever so slightly since August. They were falling previously throughout 2024, so they stopped falling, which is great, improved ever so slightly. So that's positive news for sellers. New listings have continued to be more than 12 months prior, up slightly compared to 12 months ago, but still not up to normal new listing volumes for November. Sales volumes up strongly, and for the first time in ages, we've seen sales volumes over what is the norm for the month. And we haven't seen this level of sale volumes in a month for about 3 years. So very positive news for sellers. Duration to sell up and still long at about 42 days compared to November 2023. It's longer than that, but down on recent duration to sell over the last sort of 4 to 6 months or so. So again, it's moving in the right direction. Good for sellers. Inventory is the same as a year ago and 2 years ago, but down compared to the last 6 months. Trade listings up versus 12 months ago, and it says they're down up recently. That's incorrect. It's down as we head out of November and in towards Christmas. So overall message for sellers is the market is definitely slightly better than early in 2024. And in particular, I'm encouraged by that big increase in sale volumes. Message for buyers is still lots to choose from. Get amongst it, make the most of these conditions. And of course, big thanks to Real Estate Institute and realestate.co.nz for the data. Big thanks, of course, to you guys for checking in on these presentations, each month or whenever you get the chance to. Opportunity now to jump in if you've got questions or you want to discuss things. Alternatively, you might just be in a hurry to get out the door and get on with your Christmas shopping, and I can forgive you for that. Okay, something in the chat there. Let me have a look. What have we got? Any data on what's happening in the rental market? I haven't checked that very recently. Last time I checked was about 2 months ago in terms of actual data. And at that time, basically the rental market in Wellington was still reasonably dire. And it has been pretty bad for about 18 months by my take on things in terms of the empirical evidence and in terms of my take on my anecdotal evidence, just by talking to property managers and my own experience as an investor and clients and friends and so on who are investors as well. There seems to have been an increase in activity levels over the last month or so, but again, I think that's quite possible. It's likely that that's just seasonal. As we head to the end of the year and we get a flurry of activity, people wanting to make decisions and secure things before Christmas hits. But the data I've seen is that Wellington rents compared to Wellington household incomes have never been more affordable since 1992. So that means rents compared to incomes are low in Wellington, and that's probably shocking news to a lot of people who would think that rents are very expensive still. And I'm not saying rents aren't expensive, but relative to our household incomes, rents have not been cheaper in Wellington since 1992. That's a long time. And so that, to me, that says there is plenty of headroom so that when the supply and the demand balance reverses, and I have no doubt whatsoever that it will, there is plenty of headroom for rents to go up before they are really putting more pressure than what is normal on the household budget. What else? Yes, there have been approximately twice the number of listings for rent in the Wellington region than we saw in most years recently until last year. Last year was also quite high, not as high as this year, but prior to 2023, so 2017 to 2022, I believe, we were roughly at twice those levels throughout the winter this year in Wellington region. So that's horrendously high vacancy rates. And again, the data I've seen, looking at John Butt's data, and John does some very good rental and market analysis. he was showing that vacancy rates, by his analysis, roughly 2.5% vacancy across the whole market is a balanced market. So you've got less than 2.5% vacancy, market's very tight, rents likely to rise. More than 2.5% vacancy, market's very slack, and rents likely to soften, at least on a real basis, not keep up with inflation and wages. And Wellington has been markedly above 2.5% vacancy for reasonably consistently over the last 18 months or so. So definitely a soft rental market. And in particular, the student market has been quite dire. And a number of our members, a number of our Wellington Property Investor Association members with the larger properties, which are typically, utilised by students, the 4, 5, 6, 7 bedroom places, they're really suffering and having to offer extremely big rent decreases, like 20, 30, 40, even more, 50% rent decreases on those really larger places. So that's all I can say at this point about the rental market. I hope you all have a great Christmas, have a nice holiday, treat yourself to something nice, go somewhere warm, spend time with your loved ones, and don't worry, we'll be back again next year. Plenty more work to do next year. All right, folks, take care. See you.